With silver coming off a fresh 11-year high and $30 silver finally here, mainstream financial media outlets are taking note. Today we will analyze and discuss a recent Bloomberg article, Hot Commodity Silver Sets Pace as Demand and Deficit Drives Rally. Hi, and welcome to Minuteman Precious Metals, where it's my goal to enhance your financial preparation and prosperity and motivate you by tracking my personal stacking adventure. Thanks to all my new and returning viewers. Please like and subscribe if you enjoy today's content, and ring that bell if you'd like to be alerted when new videos are available. I appreciate your views, but I really need your likes and subscriptions to grow this channel. Thank you for your support. Gold's record-setting rally may have captured the headlines this year, but it's silver that's running harder and faster as the less glamorous metal benefits from robust financial and industrial demand. Bloomberg reported that silver has soared by almost a quarter in 2024, outpacing gold and making it one of this year's best performing commodities. Yet in relative terms, silver is still cheap. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared with the 20-year average of 68. I agree, when you look at the 20-year chart, silver does look cheap. But when you look at the 10-year chart, silver looks more fairly priced. And that's the chart in front of you right now. You can see the average 10-year gold to silver ratio was just below 80 at 79.38. Today, the GSR was 78.52 at the time of filming, making it slightly more expensive than its 10-year average in relative terms. The two metals move largely in tandem, as both offer similar macro and currency hedging properties. With gold hitting $2,400 today on central bank buying, retail interest in China, and a resurgence in bets that lower U.S. interest rates are on the way, silver's gone along for the ride. Although there has been little interest from investors in silver-backed ETFs, physical sales have picked up. Singapore-based dealer Silver Bullion Pte. Founder Gregory Gregerson stated, even clients who are interested in buying gold are starting to say, well, maybe I'll buy silver first and wait for the ratio to sort of rebalance. Between April 1st and 25th, the company sold 74 ounces of physical silver for each physical ounce of gold that it sold, compared with an average of 44 physical silver ounces sold to an ounce of gold sold in 2023. So this company is providing us with insight that silver demand has almost doubled during the month of April in comparison to its previous year sales. That's quite interesting, as many stacking channels are covering that no one is buying silver at current prices. Silver has already been making headway against gold in relative terms. Back in January, the gold-silver ratio was above 90. Citigroup was quoted in a note that if the Federal Reserve proceeds with interest rate cuts and economic growth stays strong in the second half of 2024, the ratio could move to around 70, although it cautioned that a slowdown would push it the other way. In my mind, that's still a big if. It's not that I don't believe that it can't happen, but inflation does not appear to be dropping fast enough for the Fed to take action by lowering interest rates. April's hot PPI numbers and lukewarm CPI numbers didn't convince me that interest rate cuts would be on the horizon anytime soon. Of course, we are seeing silver making great strides in price, increasing recently without interest rate cuts, as mentioned before, hitting a GSR in the 78s today. Silver has a dual character, valued both for its financial asset properties and as an industrial metal, utilized extensively in clean energy technologies. The metal is a key ingredient in solar panels, and with robust growth in that industry, usage of the metals is expected to reach a record this year, according to the Silver Institute. I cover that Silver Institute's most recent article extensively in another video. I'll link that in the description. Against that backdrop, the market is headed for to its fourth year in deficit, with this year's shortage seen as the second biggest on record. That's led industrial users, which typically rely on miners for supply, to seek ounces by draining the world's major inventories. Stockpiles tracked by the London Bullion Market Association fell to the second lowest level on record in April, while the volume at the exchange in New York and Shanghai are near seasonal lows. Over the next 2 years, the LBMA stockpiles may be depleted given the current pace of demand, according to TD Securities. The headline figure overstates the available volume of metal, given that it is including exchange-traded funds holdings, said Daniel Galea, a commodities strategist, in an April note. That is something stackers already know. Demand is there, and if you don't hold it, you don't own it. Gregerson went on to say that we are slowly going to see supplies tighten because industrial demand is set to go higher. If investors are already starting to buy, then I think in 2 to 3 months' time, my biggest problem might end up being where do I find supply rather than how do I sell this silver. That's an important note for silver stackers, as we are being convinced that there is a huge amount of silver pouring into buyers and that buyers don't really want it. Hopefully this scenario plays out this way and there's a real squeeze on the silver supply to the point that we see a large price move in the physical metal. Let's call it there. Thank you for watching, and remember, time is your most valuable asset, and I appreciate you sharing yours with me. Minuteman 6, signing off.